Where are you? Is this a
I'm in
home?
Dallas.
Yeah. Do you guys have you have an office in Dallas?
Yes, we're actually we sublease from Ambridge.
That's
So
hilarious.
yeah, I'm downstairs from Craig Smith.
That's hysterical. That's how you get all your good deals. Jen, thank you for coming. I appreciate you being here on Teague Talks. This is going to be exciting. We're going to dive into everything that is Jin Lee. I'm going to make you really uncomfortable. Find about Singapore and REITs is going to be great.
Okay, wonderful. Thank you for having me, Teague.
So I do want to find out, again, CEO of ARA, publicly traded on the Singapore Stock Exchange. So that in and itself makes you a very unique entity in the hotel space. And I know you guys got a bunch of changes going around all along. So I want to hear about your Q2 earnings reports and just the genetics of how you get money from Singapore to the United States and why people, I guess, want to invest in the hotel space, right? I mean, that's what you do. Yeah.
Right.
Great. But before we do that, I got to find out who's Jin Lee and how you got here.
Well, I mean, I was born in Seoul, South Korea, and I immigrated with my family when I was 3 years old. I was told by my mother I had to be a doctor or a lawyer
of course,
all my life, and then I went to hotel school at Cornell. My first job out of Cornell was actually in operations. I worked at the Ritz-Carlton in San Francisco, part of that opening team. And even though I concentrated mostly in finance, my financial advisor, the late Jim Eister, who was my professor, said, hey, look, you could always go into banking or consulting because those were my other choices, or you could actually take your degree and go deeper and really become an expert in the field. And that was really sage advice for me. And having a background in operations and knowing kind of how hotels work, I think has helped me in my career become a better investor, a better manager of a real estate investment trust.
That's fascinating to hear you say that, because I agree. Everyone, especially today, graduates and wants to go straight to finance, right? Going to finance, I'm going to get a job, and then I'm going to be an investor, and that's what I'm going to do.
Right.
So how long were you in operations?
Yeah. So, working in operations was great because it just helped me understand how hotels actually work. And, I've always been more postured as a student of life and a student of what I'm doing. And so even when I wasn't working in operations, so for instance, when I worked in Marriott, what I did was I spent a lot of time with our ops people asking them questions. Why do you do this? How does it work? And then the thing that I try to do from a financial perspective was, okay, so no one likes, underwriting from a bunch of deal guys because all we do is produce pro formas that look like hockey sticks. So, when I would get resistance on like, no, Jin, that's not the way, we don't buy into those numbers. Then I would say, okay, then how do you look at it? And what are the things that you focus on? And then let's break it down. So, part of my brain works as like trying to understand things and then try to model it so people can follow along with it. And that's helped me greatly, just working very closely. So I've had the privilege of working with some really great operators in my career. And those people have taught me a lot about the business that, because I didn't stay in operations long enough to become a master of that,
yes.
But I did speak and deal with a lot of people who were masters at their craft. And working with them helped me understand and analyze really how hotels work. And that's the whole thing with investments that I've learned, because my career is really focused more on the investing side previous to running this REIT. And the investing side was always about you can buy something right at the right basis. Selling, you've got to take some chances there because the environment's got to be right, the buyer pool's got to be right, et cetera. But the operational execution of an investment, because hotels are such an operating business, is so paramount to what we're, to make money in the hotel space. So really focus a lot on the operational side. And that's one of the things that is a key strategy in our REIT is we deploy a lot of what we call hands-on asset management. So for a Singapore-based REIT, I'll just jump into that. there's a requirement in Singapore that if you're the CEO of a REIT, they actually want you to be resident in Singapore.
Yeah.
So when you have overseas strategies, a lot of those guys actually move to Singapore and run the business from Singapore. I got an exemption from MAS, which is the Monetary Authority of Singapore, which is the equivalent of the SEC here in the US. And I said, look, the portfolio is all in the US, and it's also very operationally intensive. I can't leave the US because I got to be near where the properties are. I got to be near my people. So it's one of these, it's an approach that's very different. We had another US hotel strategy that, unfortunately blew up in Singapore. But that CEO, was based in Singapore, and he tried to operate the business from kind of a remote control perspective. And again, to me, that's just not the way it works. And, what's a little bit different about me is I actually go see my hotels. I actually go and visit the properties because so much about what we do is, again, people execution, and you can only find that out once you're in the ground. You're talking to the people and you're seeing what's happening, in real life.
And on the transaction side, speaking from an intermediary, right? All the time we get sellers that want to sell to sovereign wealth funds, and they think it's dumb money. And our speech is, those people to me don't exist unless they have feet on the ground in the United States. Right. This is a relationship business. So you and I got to get to know each other. Your teams and my teams got to get to know each other. And that's how we get transactions done. If you're in Singapore and we've got to deal with a time change, and that's a more complicated, I'm not sure we believe that you're real. So we love having the feet on the ground, people here that we can develop a rapport and a relationship with at the conferences and at dinners and the like. So I think that's very valuable on top of your asset management of your assets.
Right. Exactly.
Just throwing it out there.
Yeah.
All right. So how'd you end up at ARA? How'd they find you? Because it was newly started. You were the very first sort of CEO of this newly formed REIT.
So just kind of backtracking.
Yes.
I met the ARA guys in 2017 when I went to Singapore. I was actually doing, I opened up my own advisory firm. And part of advisory was not only just looking for deals, but it was actually helping people place capital. And so, on a business trip to Singapore, I met the ARA guys, and then the CIO of ARA at that time happened to be a person I actually met 20 years prior in my life. So we reconnected, and he said, look, one of the things that we've got a great Asia Pacific presence. We've got investments and offices throughout Asia, and we're trying to grow globally. And we need a partner, and would you do some consulting for us on the US side, because we're extremely interested in moving into the US. So on their behalf, I looked at a bunch of different deals, and we ended up buying a portfolio of 38 Hyatt branded select service hotels.
Yeah.
So we bought that portfolio in November. We closed on it in November of 2018. And so I said, okay, here's my final bill. We've closed the deal. We're done. And they said, hey, would you stay on and run the company? And I actually said, no, I'm much more transaction oriented. I wasn't interested in running a portfolio. And they said, well, what we want to do is we want to list it on Singapore Stock Exchange. I said, oh, okay, now that's interesting, because I'd been involved in taking a company private, but I've never done a public listing before. So that attracted me, and so I said, yeah, okay. So in January 2019, they assigned me on permanently as the CEO for this new to be formed REIT that's listed in Singapore. So I did the roadshow throughout Asia. In 2019, we IPO'd in May of 2019. And, it was great because our objective was to take 38 hotels and go to 150, 200 in 2 years time frame. So that was the goal at that time. That was the strategy. We had closed on a small portfolio in the beginning of 2020. We had another portfolio in the queue that we were under contract for, and then COVID hit and changed the entire strategy for us.
Yes. What's it like managing a public company through COVID, through a global disaster?
So during that year and a half in the depths of COVID, I couldn't travel back to Singapore. So we did a lot of our meetings remotely like this. And fortunately, I had a good CFO that really was the leader of the group in Singapore. So we made it through. The difficulty here also in the US was, no one was traveling, no one was flying. And we had real, it was a tough time again, because when we bought the portfolio of 38 hotels, and I saw all 38 hotels in my due diligence period that was only 30 days. So I made a point of going out there. During COVID, same thing. A lot of these managers, now that you're in a skeleton crew, some of the hotels are closed. And they haven't seen anyone. And they haven't seen anyone from the brands. They haven't seen anyone from the management companies in a long time. I haven't seen guests in a long time. Yours truly actually got into the car and just drove. So I just drove all over the country as far as I could. We have hotels, on the West Coast, but I didn't drive all the way there. But mostly the Eastern Seaboard, I drove to, and I drove as far west as our Detroit, Michigan hotels. But just to make sure that people knew that, I cared, and that they were important, and what they were doing for us during that very difficult period of time was important. So that's something that I didn't, obviously we didn't learn in hotel school. It wasn't textbook, and we often joked about that with some of my colleagues of like, hey, what do we do? And there's no playbook for what had happened.
So help me then. Now you're leading this. You come out of COVID, and then the world sort of comes roaring back. And then now we're slipping again. So how are you managing through both of those cycles?
Yeah, well, I wouldn't say we're slipping again, but certainly our share price has not been good. Look, we've had some other dynamics because our investor base is predominantly in Asia. When the investor base is out of the US and you're running a US strategy, the
Yes.
biggest challenge I have is what I call headline risk. Things that they read in the newspaper, and the news doesn't like to report good stories. News likes to report horrific events, crises, bad things that happen.
Correct.
And so when Singapore is a small island country, population about 6 million people. So something that happens in Singapore impacts the entire country, impacts the entire population. They read about something that happens to the US, and the paradigm is, okay, that must impact the entire US. So there's an event that happens in California or the Northeast, and I get calls or emails saying, "Are you okay? How are you dealing with this?" So it's important for me to explain to everyone that the U.S. is a big country,
Yeah.
and we're 50 states, and a lot of our cities are larger than their country in terms of overall population. So it's kind of managing that difference in perspective.
That answers my question on what's the difference in running, in your opinion, of running a US REIT versus a Singaporean REIT.
Yeah.
And those are the types of things that you have to deal with, that you
Right.
don't have to deal with here. They know the difference in Charlotte and Los Angeles, right? They know the difference in these markets here instinctively. I mean, do you have to be in the major metros, or do they just want returns? Does it not matter?
Yeah, no, the biggest challenge we had is explaining the fact that there are multiple markets in the US. And if people travel, they're like, yeah, I've been to the US before. And I'll say, let me guess, you've been to Honolulu, you've been to New York, you've been to Los Angeles, San Francisco.
Right.
And that's generally where it stops. That's generally where the extent of visitation to the US has been. So having a portfolio with no hotels in Honolulu, New York, Los Angeles, or San Francisco then makes it more challenging, because then the question is then where are these? I've never heard of cities like Raleigh, North Carolina, or right, San Antonio, Texas, or Albuquerque, New Mexico. The challenge is trying to explain US geography and kind of what makes those markets work. But the biggest challenge we had, particularly when I was going and doing the road shows, is what is select service?
Yeah.
So if you really think about it, select service, started with, Marriott launching Courtyard by Marriott in the mid 1980s. So it's a 40-year-old concept in the US. So we kind of say, yeah, select service, we totally understand it. In Asia, hotels, particularly markets like Singapore or Hong Kong or Seoul, Korea, branded hotels are really nice. And, this is where the concept of like 6-star comes up.
Yeah.
And I remind people that mobile rating guide only goes up to 5, and getting 5 stars is tremendous. But the concept or notion that there's a 6-star just means that a lot of these glamorous hotels are overbuilt. But people say, well, when I travel, I go and stay at the Ritz-Carlton, I stay at the Mandarin Oriental, or stay at the Four Seasons. And they look at our portfolio and they go, this is not even the Grand Hyatt. This is not the Park Hyatt. Not JW Marriott. This is what is Courtyard by Marriott or Residence Inn by Marriott. So a lot of that is trying to explain to people that it's a different price point. But in Asia, it's still predominantly either luxury or really low end.
Yeah.
There's not really a middle. So for me to explain this concept of being a middle and why select service, why we selectively offer certain services and don't, so you can't get, valet parking services, you can't get spa services in our hotels. They kind of like, well, then, who stays there? And what's the purpose of it? So got to go into a long background story of explaining to them that the US, we have a big middle class, and not everyone stays at luxury hotels, and not everyone stays at Super 8 hotels, right? It's not the large bookends, but we're more concentrated in that middle, and that middle is kind of what's growing. The other aspect that I have to remind people is that, hey, look, generally select service hotels relative compared to the full service peers, we have about a 10 percentage point profit margin difference, right? Because of this select service, because we've skinny down the food and beverage offerings. Yeah. We've taken away a lot of the other services that don't make money. So, it's an interesting thing because people gravitate towards luxury, particularly in Singapore. So, people know about like Crazy Rich Asians movies and, that kind of stuff. And look, I go to Singapore, and when I stay at the JW, there will be like a Ferrari, convention, and there'll be, 40 Ferraris out in front. So, and you're like, this is a small island. How did 40 Ferraris show up? So it's pretty impressive in terms of the amount of wealth that's concentrated in Asia. But then to explain to them that, look, as a REIT investor, what you want to do is you want me to put money into hotels where we maximize cash flows and maximize returns back to you guys. So I said, look, everyone loves to stay at a Four Seasons resort, but if you really want to make money, Home 2 Suites or a Residence Inn is going to print money for you. Explaining that and explaining something that's conceptual but not necessarily tangible for a lot of the investors in Asia is difficult, because we do have some select service hotels, but there's a Singaporean tycoon that is very close to Holiday Inn. He built the Holiday Inn Express, and the Holiday Inn Express has a rooftop pool bar. It's got meeting space. It's fully decked out, so it's really not a Holiday Inn Express. So there is this challenge for me to explain kind of why we invest in upscale select service hotels, and why we favor certain markets over other markets.
Would it be easier for you to raise money if you were investing in Ritz-Carltons in New York, San Francisco, Hawaii? Like, would that be an easier path?
It would be from the standpoint of it's identifiable,
Right.
but then but
They
look,
don't make money, so then it
REIT
all falls apart.
investors, REIT investors invest in REITs because of the dividends. And
Right.
so if you're not producing dividends, then you're in the wrong, you're in the wrong space.
Is there a demand, I guess I'm trying to ask, for the Singapore investor to get money out of Singapore and get it into the United States?
Yes. So the whole strategy, the premise of the strategy was this. Well, we wanted to give people an opportunity to invest in the US in the specific asset class that I know well, which is hotels, and give them exposure in the US that helps them diversify their own investment portfolios, but do it in a tax efficient manner. So the tax efficiency is absolutely key because what we're doing, what we've set up, there are other REITs that do that. And my historically, I've always joked that there's too many REITs that have the same strategy.
Yes.
And they do. So like our friends over at Summit or Apple REIT have a similar select service focused strategy. And the question is, well, then why wouldn't an investor from Thailand invest directly into Apple?
Yeah, good question.
Or Summit? And the key is tax consequence. So the US, if you don't have a treaty with the US, then, and most of the Asian countries do not, then when you repatriate money, Uncle Sam hits you with another 30%. That 30% withholding tax then basically says, hey, look, I thought I was earning 7% on my investment, but now with the withholding tax deduction, I'm earning 4.9%, right? So
Oops.
that's what makes it difficult. And so our REIT, we purposely structured it so we take advantage of an offshore vehicle, which is a Cayman vehicle, and we create a kind of a loan vehicle. So it basically takes advantage of what we call portfolio interest exemption. And that portfolio interest exemption allows us to not fully eliminate the withholding tax effect, but it mitigates it down from 30% to right around 4 to 5%.
Great.
So if I'm able to deliver a 7% yield, then
Sure.
they're getting closer to a 7 than they would with one of my US peers.
So you're a tax efficient strategy for the Singapore investor to be able to invest in.
Well, yeah. So we call it. We don't call it just for Singapore investors because we do have other.
Sure. Yeah. Good point.
So
Good
we
point.
say non-US
Non-US. Okay.
investors,
Good. Well
and
said.
that's one of the reasons why what happened was we had a very clever investment banker that had exposure that had worked in Singapore and was back in Israel, and then also said, look, my Israeli friends and institutions want to invest in the US, but again, hate the tax consequences for it. And so they invested in US strategies like mine in order to get US exposure because globally, everyone likes to have US exposure, right? I mean, it's a large market. It's a very liquid market. We've got the rule of law. We've got, currency stability. So all these factors make investing in the US attractive. So people don't want to be concentrated in either their home countries or in the region. For people with enough money and institutions, there's always a need to invest and having part of your investment in the US.
I get that, but it's interesting to me that the Israeli investor, to your point, instead of investing directly in the United States, whether it's into an asset or through a publicly traded Apple or Summit or something, chooses to go to the Singapore Stock Exchange and invest in a Singaporean company that is investing in the United States because it's more tax efficient. Correct. That's interesting. All right. Good for you. If that's a better mousetrap, good for you.
Yeah. So I've done road shows, in Tel Aviv. So it's
so how's the money raising? Let's talk about the road shows. Let's talk about the future and where you're investing. How's the road show? How's the money raising? How's the investing strategy? What are you telling everybody? How do you see the future?
Well, our issue right now is we're trading at a significant discount to our NAV. So a couple of other things about S REIT that's different than US REITs is Singapore REITs we have actually a mandated ceiling in terms of leverage. So it's 45%. So Singapore is very conservative. You have a 45% maximum, what they call gearing ratio or LTV. And if you are over a certain interest coverage ratio, an ICR level, then they'll allow you to move up to 50%. But 50% is the last leg. Last time I checked with my US friends, there really is none. I mean, REITs like to be low leverage anyway,
Right.
but there's no way for me to go ahead and do more stuff if my share price is depressed relative to NAV. Then it's hard for me to do an equity fundraise because then it's dilutive to my
Yeah.
existing shareholders. And
Yep.
we haven't been around long. We've been around that long. And then equity, and so sorry, debt raising is also difficult because we actually have a mandated cap. So it's a regulated cap on how much I can borrow. So what that does for us is it makes us look at recycling capital instead. So while we're trading a discount to NAV. Oh, and by the way, our NAV is a real NAV. So MAS mandates us to actually get mark to market each year. So I have to get an appraisal done of my entire portfolio. So they want a third-party appraisal done. So I just can't carry book value and say, that's my NAV. I actually have to get objective third-party appraisals done each year on my entire portfolio. And so my portfolio is marked each year. And if I do a refinancing, it gets marked again. So that makes me understand that my NAV is real. And when we trade at a discount, right now, look, I'm trading at like a 65% discount to NAV, which doesn't feel good.
Yeah.
But we've been selling assets, and we've been selling assets at those marks, because one of the things we have to do is we actually have to disclose our marks, in our annual report, what those valuations came in at. And as we've been selling assets, we have to sell. Also, I'm not allowed to sell anything outside of 10% less than what the appraised value has been. So,
okay, fascinating.
I've got a lot of little handcuffs around me. But
that's right. Send them over. I'll tell you what your real values are. We can feel good about it. We'll go from there.
Exactly. But what we've been doing is, as we've been recycling assets and we've been selling them, we've been demonstrating to our investors that, hey, look, our NAV is actually real, and we've been liquidating really our non-core assets. So this is the kind of the lessers of our portfolio, and we're still getting those marks. So it's the REIT business. It's a much longer game than private equity was for me. Private equity, we had very short time horizons. In the REIT business, what I've had to learn to do is slow down and think about the long play, and how to make how to turn that strategy, into a longer lasting, longer playing out, and have the patience to do that. So, the hope is that as our share price recovers, that we'll be able to do more equity fundraising, and then go back to the business of what we initially set out to do, of adding not onesies, twosies to our portfolio, but actually adding portfolio to portfolio, and getting scale that way.
Yeah, I love it. I'm curious, when do you see that happening? Macroeconomic question. When do you see that happening?
Well, so a couple of things have to happen. Obviously, the fundamentals in lodging in our US economy have to keep on churning, which, as far as I can see, are pretty stable at this point.
Yep.
But then, the debt markets have to clear out. So a lot of the overhang we have in terms of, distressed assets, clearing books, that has to clear out. That also might invite, investment opportunities for us. But a lot of that has to come back. We have to get a more of a normalized, lending environment where lenders actually, are back in the business of lending money for, hotel real estate. I'm not expecting pricings to, interest rates to go back to zero again. But hopefully they do turn downwards because we've been elevated for so long. But we get more normalized interest rate environment, and then the kind of the what spooked the markets obviously was the failures of three fairly well-known regional banks. So once we get back to a normalized lending market, I think transaction market will pick up, and then there'll be a lot more trading, and the price discovery aspect will kind of pass, and people will have more buyers and sellers on the same page.
The lending market's coming back. I do think that's a good thing. We're starting to see that page turn, even just in the last few weeks. So we actually feel very optimistic about that.
Yeah.
And you're starting to see some of the optimism come back in the investment community. So I feel good about that.
Right.
I don't know what the balance of this year is going to look like. Everybody's talking real positive about next year. So we'll see what that looks like. We've talked about the joys of being a Singapore REIT. Give me some of the I don't know, the future for Jin Lee.
It's what I know is that we're not out of the woods yet for the REIT. We still have a long way to go in terms of our share price recovery. We've got a lot of wood to chop in terms of shaping up our portfolio, fixing a lot of problem assets, buying new stuff, and there's a lot of stuff to do. And we run it with a very lean team.
Yeah.
So I'm not a corner office CEO where I just show up at the office and I'm gone 3 p.m. and I don't work Fridays. We do really spend a lot of time working together and doing a lot, but so they allow me to run this as if it's my own business. And so therefore it's hard when you ask me the question, like, so what's next? It's hard to see that because I'm so entrenched in what I'm doing right now. And I get a lot of joy out of it. And the odd thing is working for a Singapore-based company is a lot of long hours. So I think, I know there's people that, either start their days early or start their, or end their, nights late. I happen to do both. Because
I believe it.
I get up in the morning, there's like, 30 or 40 emails waiting for me because my Singapore team has been working during their days, and they're waiting for me to make decisions, read things, approve things. So I usually wake up to a slew of emails. I do enough of that, go work out, eat breakfast, come back and work in the office here in the US, normal hours. And then I'll go home, eat dinner, and then get back on emails and phone calls in the evening. So the lifestyle fits my kind of workaholic tendencies, because if you enjoy something, you don't really consider it work. But the hours do get long. My wife always jokes that I work 2 people's jobs, so I should get paid twice, but I don't. But it is something that I do find it's unique because of my Singapore team is really constructed of our investor relations and finance.
Yeah.
And so they have things that bubble up and they have to deal with, and again, need decisions made by person in charge. And then on the US side, it's asset management and investments. And again, we've got a portfolio currently of 34 hotels. We're in 18 states. We have 4,500 rooms. So there's a lot to be done here in the US. There's a lot happening, in the portfolio. And then, we're also constantly trading. So we've got assets for sale on a regular basis, and we're always looking at buying new assets into the portfolios.
Well, listen, Jin, for what it's worth, I think you're the right guy for the job. So, and I think I'm fascinated to hear all the stuff that you got to work through, right? All the different Singapore rules in the US. Here we just have to worry about buying and selling hotels, right? I mean, it's not overly complicated. Is the world going to go up or down? And sure, we'll help you sell your old courtyards and buy some new courtyards, and sell old Hyatt places and buy some new Hyatt places. That seems like the easy part of what you're having to deal with.
Right.
So, cheers to you. Thank you very much for coming on and talking us through all this stuff. I think it's fascinating that we're learning a ton. And I want to know, I'm paying attention now. I'm going to start watching the stock price a little closer and see
Thank you.
So, Jen, thanks for coming on. I'll see you. One, we're working on some stuff, so let's talk there. But you spoke at the conference last year. You did a great job. We'll hope to have you back again this year, and so everybody can see him there if that's what they're looking for.
All right. Thank you. It was my pleasure. Thank you so much.
Thanks, Jen.